All right. Good morning, everybody, and happy Tuesday. Can you guys hear me okay this morning? If you could just quickly confirm in the questions box if you can hear me okay. The chat box, I think it's called chat box here on YouTube. And then we're going to get started. I know, cold weather, certainly a theme here this week. And I think still getting colder, right? That's what I hear. Good. Well, listen, let's get started. I want to go through a few things here this morning. Obviously, we have a Fed meeting tomorrow, and I'd like to just remind everyone that this is a bit of a risk management exercise now from a near-term perspective, but also it's important that we start looking towards 2026. And so, if you are new to the channel, what we're going to do here, and by the way, my name is Serge Berger, I'm from thesteadytrader.com. We are going to spend the next sort of 10 to 15 minutes going through some of the top things on my notepad. And so if you're new, please make sure you subscribe to the channel and give us a thumbs up like. For everyone here, by the way, on all the videos, including this one here, that helps us to be able to continue to do the show. But I want to go through and talk a little bit about. I want to talk a little bit about essentially risk management. But let's first talk a little bit about performance year, quarter to date. This is an important. This is now quarter to date, right? So meaning like here in the fourth quarter. If you recall, coming into the fourth quarter, you couldn't turn on TV without everyone saying that the fourth quarter is going to skyhook higher in terms of stocks. The reality is we are now 2 1/3-ish months into the fourth quarter. We have about 2 weeks left in terms of real trading. And the S&P 500 for the quarter is up 2.6%. Now, it's still not bad. That's still 1.3% a month. But it's not the magical unicorn numbers that people were promising. It's important to think for ourselves and have our own process. The NASDAQ 100 is up 4%. That's 2% over the course of October, November. Bitcoin, of course, down 21. Ethereum down 25. And, of course, the price of gold, particularly silver, is doing very, very well, right? Like up 26%. So the hard assets theme that we've been talking about now since the late summer, basically autumn 2023, and then really got bullish on it as we confirmed that in January 2024, continues to rip roar to the upside, right? So that's really important to understand what's going on there. In terms of the different sectors, there's another way of looking at this, which I'll quickly show you that here. If you give me just 1 second, I'd quickly like to share with you what that looks like from a sector's perspective. So here is the quarter-to-date performance of sectors, right? So technology, and this is probably sort of year-end window dressing, and I think this is still very open as to what could happen. But notice that healthcare remains the performer here in the fourth quarter. Didn't hear a lot of people talk about healthcare at the beginning of the fourth quarter, right? And energy stocks are doing better, than they have for a while. But more importantly, they're up, 1.7% on the quarter, and over the past few days, the energy sector. Let's go back to month to date. Over so it's like third in place. So energy is really starting to make a big move. I'll show you this, particularly if you're an Inner Circle member or Market Roar member. We can talk about that in our member session here in about 15 minutes, because the energy sector really is something that we really want to pay attention to as we head into 2026. We've already had move in utilities and such, and we think energy could be next. Now, we talked about a chart on, let me see here. We talked about this chart here yesterday. I'd like to just reiterate this chart and kind of show people where we're coming from on this so everyone can understand. So this is the chart of the commodity space. This is just the Bloomberg Commodity Index. Again, we talked about it yesterday. I want to reiterate it, and it's really a major theme for us for 2026 and possibly for years to come. So the Bloomberg Commodity Index is basically, there's a lot of structural tailwinds. And this is just the chart here. So you can see basically support, and we think we could move higher. If we see anything like some of the previous moves, when we had these moves, it could be anywhere between 30 and as much as, 80%, quite frankly, which is what we saw in that last breakout. So, or even 100. So let's say we have a 50% move, which is like median. We would see the Bloomberg Commodity Index more or less go back to where it was in May of 2011. Now, why is this important? Because if you take the S&P 500, which is this green line, you can see it started making higher highs basically in late 2023 heading into 2024, right? So that's this move, the green line. Next, you have the basically metal, precious metals and all sorts of metals kind of thing in miners space, which you can see started doing that same move. Well, it really started doing it, quite frankly, in the spring of 2024, but then had a retest and is doing it now. The question is whether commodities are going to be next, right? And that's really one of our major themes that we're going to talk about tomorrow in our educational session. Remember, we do a strategy session every single week, and I'd love to invite all of you to join that. It's completely free. So if you don't know about how that works and what sort of our case is for some of those major moves going forward and how that might impact a portfolio, I would encourage you to join us. It's our capital rotation strategy. Again, this is educational session. It's tomorrow, Wednesday, December 10th at 11 o'clock Eastern. So that's something that we will talk about, and I think this is a major development here as we head into 2026. This is not a trade for the next day or two or three, but really this is a major rotation. We've already seen, by the way, some of this rotation meaningfully this year take place. If you look at, again, the metals and mining space and gold and silver, right? But we think it's only going to increase and accelerate as we head into 26, and quite frankly, probably for years to come. So we'll show you not only how we do this, but also sort of what we're looking at here. There's a whole bunch of stuff that we think could rally. Utilities already had a big year this year. So again, join us for that here this week. That's our weekly educational session. Again, we do a weekly educational session where we teach people strategies and sort of some of our ideas, and that's the one that we're doing here this week, okay? The other thing I want to quickly show you is some of the performance of other assets, basically, I guess, quarter to date. So if you look at, for example, NVIDIA, right? So this is, again, where it really helps to have a process rather than listen to storytelling by people. So since the month of October started, NVIDIA has exactly done nothing. It's just important to keep that in mind, right? A lot of people telling stories, and listen, the stock can still rally. It's just that if we're betting the quarter or the year on the last 2 weeks of the year, that's a little bit silly, right? So basically, all these chart chasers on TV, but I'm trying to tell you, they were wrong on this. Now, they might be right, but it's, you can't you can't hope for something miraculous to happen in the last 2 weeks of the year. It may, it might not. It's just not the time of year to really make big bets because there's less volume. Then you look at something like Oracle, which told us miraculously, good stories back in September when it gapped higher. Well, the stock has basically dropped, all of that and then some. Ultimately was down about 45%, still down about 35%. You can even look at something like AMD, right, which everyone and their mother thought was going to go to the moon after it gapped higher. So after the earnings gap in October, it's done absolutely nothing. So just keep that in mind. If it wasn't for the earnings gap, it would have done, pretty much nothing. Okay, so my suggestion here is to be open-minded to what we're doing is we are reducing position size and position. So if you're, a member of, let's say, something like Intermarket Rover or a PPIS, that we've been reducing positions, and we're going to reduce even more into the Fed, and then that way we don't have to, hope and guess, but we have a process and we can react to something then if something interesting comes up. Last thing quickly, and this is, more from a structural perspective important. We talked about the Japanese bond market, and I know this doesn't really resonate with too many people on the retail side, but it is my duty to make people understand that this is important. So this is basically now you can see the 10-year yield in Japan is now basically at 2%, and it's it's not that that's an interesting yield for U.S. investors, but Japanese investors, some of the biggest bond investors in the world. And so they're now for the first time having competition with their own bond market versus treasuries. So which is also, I think, in part, why we are seeing yields in the U.S. heading into tomorrow's what is expected to be a dovish outcome. Yields have actually gone up over the past week and a half or whatever it's been. So this is an interesting dynamic. This is not something that necessarily has to make the market really wobbly or something over the next immediate term, but ultimately that could be something that we need to be mindful of what's going on there. Okay. So so that's pretty much all I had for this morning. If you are a Inner Circle member, we'll see you in about 5 or so minutes in our Market Rover Inner Circle weekly member session, and we'll see you in Set the Market, in Trade Ops at about 9:30 or so afterwards for some trades. I would expect the market to be quite quiet here today, unless obviously anything comes out of left field. But again, I think it's a time to be a bit quieter and reduce position size and things like that. So anyway, hope it helps, and we'll see you guys back here again tomorrow at the latest. Take care.